From Abuja.
It's all about the human struggle to raise the level of living. That's what it's all about. I'm Magnus Packle, and this is Magnus Packle GVA. I appreciate you being a part of our show. In view today, we conclude our discussion on microfinance. How can microfinance help us assure economic and social inclusion? But before that, let's take a quick view on insurance and development in Africa. If there is any group of people that need the risk transfer function that the insurance sector contributes, it is poor people, especially their micro businesses. The risk transfer function allows companies to concentrate their attention and resources on their core business. With this, an entrepreneur is able to transfer the management of the risks in the business to more capable hands. Insurance companies often make the mistake of overlooking the business potential in marketing to poor people. It is important to realize that poverty at a 50% rate in Africa is itself a tool that can be leveraged for development. Indeed, looking to help the poor by not just giving them fish, but teaching them how to become stronger so they can fish, can enable firms doing so to secure new investments and innovate by developing and commercializing new products and extending markets. Providing insurance to the people, including the poor and vulnerable, will help to conserve and make more efficient and effective the level of capital required by the people to protect themselves against risk. Insurance plays, in this respect, a key role in economic stability and even prosperity. The insurance sector, with its institutional investors, provides a long-term source of finance for investment in the economy. In Africa, like other parts of the world, we certainly need insurance for the big companies, like Dangote Cement, MTN, Globacom, and others. We need insurance for small and medium enterprises that are the key to the future. Not to forget, we also need insurance for micro businesses like shoe repair, taxi service, or even akara selling, as this will increase specialization and therefore output. It will also create jobs as the level of activity increases among insurers. If we are able to see the potential gains that can come from business, property, and health insurance, and include the poor in all of this, it will be clear to all, including policymakers, that the insurance business can be a real key for Africa's economic development and the fight against poverty. Still in view, the conclusion of our discussion on microfinance. But up next in our Hidden Economics, don't give yourself away. Guys, if you see a lady walk past you, don't turn around to look. Turning back to look is a bad sign to the lady. If you have to check it out, do it while she's well in front of you, and then figure out a strategy for anything else if at all necessary. Chances are she's also cleverly checking to see if you will turn around to look. She's perhaps also putting a value on you. Your looking back immediately diminishes your worth by as much as 40%. There is a value put on every second she believes you are looking at her. And as with any good thing, diminishing returns begin to set in after the first second of looking. Turning around and staring is pretty bad. Diminishing returns on your value greatly increases as it takes many seconds to turn around and look. Ladies want a man with self-assurance and a high value. They mostly want a man who is confident about himself. The psychic value on this is high. Turning to look also shows you may have never seen something like this before, and indeed may not even know how to handle it should it be available. It basically means that the value you are placing on her is extremely high. Now, if her value is judged by her to be much higher than your value, the equation of exchange will not balance. At that point, the game is over, and you will not have won if victory is what you expected. So for you eligible guys, when you see that hot chick, swallow hard and maintain your composure. It raises your value and may make things actually much easier for you. Our hidden economics for you. Last time we discussed how microfinance banks can help bring banking activities to the poor and vulnerable, and even to the rural areas of Africa. Today we will continue our discussion involving His Excellency, Honorable Chief Jethro M. Akun, MON, former Deputy Governor of Plateau State, Chairman of Eagle Microfinance Bank, and also President of the National Association of Microfinance Banks in Nigeria. We also have Mr. Kunle Okodekun, the Managing Director and Chief Executive Officer of Fortis Microfinance Bank, one of the fastest growing microfinance banks in the country. I appreciate you as you join us in our continuing discussion on the Nigerian microfinance experience. So the base, the customer base for microfinance banks, is it as it is today? Is it what we envisaged in 2005 when the policy was made? Are these the same customers that we were looking at, or has it changed somewhat?
I think it has improved tremendously. We've given more access to funds to a number of people that hitherto could have no access. We have reduced the distance that people had to travel to access loan. And I think the number improves and increases by the day.
And but my thing is, since we're giving loans, and in some cases there may be need for collateral, there are cases where there's probably not much need for collateral. How are people sensitized, especially poor people who may not have been exposed to measures like this? How are they sensitized to understand when perhaps they need to put down something for collateral and when there's probably no need for collateral?
Okay, you see, the truth about microfinance is that it's down to the methodology. You have to understand the methodology. Microfinance is not commercial banking. In a lot of cases, actually the opposite, direct opposite of commercial banking. For us, for instance, we focus on women. If you check statistics with the commercial bank, it's mostly male. They emphasize on collateral. We de-emphasize collateral. Now,
but there are cases where you demand collateral.
I'll talk about that. So when I talk about methodology, for instance, with women, we do what is called group lending. In other words, you allow a group of women to self-select themselves, either based on commonalities, either trade, language, or where they live, and then there's cross guarantee. So if you have a group of 5 women, for instance, and one of them has to pay you back, all 5 are still owing. What that just does is that the other 4 will bring peer pressure on the person owing and ensure that she pays, or in some cases they will actually pay for her. Why would they do that? Because microcredit is evergreen. If the women pay back, they're sure to get it again. So it makes a lot of sense for them to ensure that whoever is not paying pays up.
What if a person really can't pay?
What I'm saying is, if a particular woman,
yes.
Okay, now that's another area where finance is different from commercial banking. Where the customer needs help, or we call them members need help, we could also actually help. Because in some cases it might be that she needs a little extra to get out of whatever she's going through. When we started, we used to, worldwide statistic as of today on repayment is about 98% microfinance.
98%
worldwide statistic. When we started this journey about 5 years ago, I can tell you, I used to think it's not possible. You can't do that, and all that. But over time, after toying with the model, and we've tried to study. I mean, I was in India for 2 weeks, till end of last year, to just even see what people are doing. And when they come and give us statistics, how are they able to do it? And what we discover is that the average Nigerian person is not necessarily bad.
Yes.
or worse than an India where the payment is 98%.
Yes.
It's about getting the methodology correctly. But I can tell you that today we have locations where you have 100% payment and no default.
There's people making payments as
people
due.
are making payments as due.
Yeah.
And when you have challenge, like I've said, the model itself ensures that there's self-correction, there's peer pressure, and all of that.
Now, what I remember that was set in place at that time was that if you had a capitalization of about 20 million, you could have one unit.
Yeah.
If you had up to 1 billion, you could spread all across a state.
The 1 billion is now 2 billion.
No, this
Is now 2 billion.
The policy now is
Yes.
that the microfinance banks are categorized into three.
Okay.
You have a 2 billion for a nationwide microfinance bank. You have 100 million for a statewide microfinance bank where you can open branches as many as you can.
Okay.
And then you have the unit microfinance bank.
Okay.
And apart from the branches, you also have meeting points where you meet groups and enable them to access credit. And so we've made it possible for even people in the remote areas to be able to access credit, except that we do not have as much funds as we would have expected to meet up this high demand based on the population that we have and the demand that we also expect from our clients.
Mr. President himself is very keen and understands this very well. When he was governor of Bayelsa State, I had the privilege of working with him then, and he put the largest amount of money of any government, any state government on the table. He put 2 billion naira in partnership with my organization at the time. So I know that he understands, what it means, to look to stimulate activity at the grassroots. We cannot be successful. We will never achieve that, wanting to be amongst the top 200 economies in the world, if we don't carry everybody along. And it's not even a matter of carrying microfinance organizations along. It's a matter of carrying everybody along.
It's something to do by the administration, but I think it's also good to give some people credit.
Yes.
For instance, we have two governors that are talking to us actively. One, I should say, we're at about 98%, in terms of giving us fund for on lending in partnership with our SMT cooperative.
Yes.
One of the governor, also based on his background, genuinely wants to help the people.
Yes.
Genuinely wants to do microcredit. His interest is for us to lend the money at a reasonable rate and for the money to come back so that we can circulate it. So if we already have, in our own case, two of these governors who are really genuinely wants to do microcredit, I think the work is a bit easier because, and given what you said about Mr. President, if we do the advocacy thing, chances that we'll be successful is very high.
And in addition, there are a number of local government chairmen who have shown that drive.
Yes.
In fact, they have demonstrated it practically. And we will build on that. And it gladdens our heart to know that Mr. President is also a driver. We have no doubt, because even looking at the agriculture transformation program that is brought, it's a clear indication that will provide employment for our people at that level.
I tell you something else that government can do.
Yes.
This is very simple because this is what's going on in India at the moment. In India, the microfinance banks are not allowed to mobilize savings or deposit from the public. So how do they get funding? And how come they have some of the biggest microfinance banks in the world? By legislation, by regulation, all the commercial banks in India must do 40% of their risk asset base through microfinance.
Yeah.
So if our CBN governor, for instance, will just instruct the commercial bank that, look, a minimum of 10, we can start from 10, they're doing 40 in India, must go through microfinance for on lending because the microfinance are better suited to lend to certain categories of people. There's some places where we are now, we're clear, no commercial bank can come there.
But what has been the experience, with our customers, with the customer base right now, in terms of their readiness to actually save with microfinance banks, not to talk of commercial banks? Because in Nigeria now, about 70% of the people have never deposited money anywhere, saved anywhere, I should say. 70% of adults, or people 15 years of age and over, have not saved money at a financial institution. So all these people, it could be that all they have is 1,000 naira, but where do they keep it? They dig ground in their farm and keep it there? Or where are they? If we have microfinance banks close to the people, as we have said.
Yeah, but the experience will vary from place to place because of our cultural diversity and other elements therein.
Yes.
There are those who do not truly believe that they have to save and expect also that interest will accrue from the savings. There are those who prefer to buy, let's say, foodstuff. And what we try to do is that we try to conscientize them, we try to educate them on even the security of the money they want to keep either in their homes or elsewhere.
Yes.
Some may provide that money and you tie it to say foodstuff. You store the foodstuff for a while and such foodstuff is also sold at an appropriate time. Some of them have difficulties by probably some cultural reasons to come up. But we require time to actually educate them and sensitize them. Advocacy is very important in this aspect.
Absolutely.
And we believe that in the course of time, they will see reason to so do.
And that's why I think that what you're doing is not easy by any means, because you're dealing with a population that is not extremely literate. And you have to, as you use the word, conscientize them. You have to sensitize them. You have to inform them of the possibilities. I believe that when people are armed with knowledge, they do a lot more. And so you also need capacity, not only in terms of your loan base, but in terms of your ability to do the job out there, sensitizing people, causing people to understand what it means to save at an institution like yours. Where are you getting resources and that capacity from?
Okay, if I may come in our case, we have a subsidiary called First Academy. First Academy is actually a licensed trainer by the CBN.
Yes.
We train other MFBs, top management, to pass the compulsory certification exam, which all management of microfinance must pass before they can run MFBs from 2013, according to the CBN. So there is a unit of our academy that actually do what we call sensitization for the microcredit.
Yes.
There are a lot of misconceptions and myths about microfinance. It is wrong, absolutely wrong, that the poor don't save.
Yeah.
Our experience has been very different. For instance, the women, we have a scheme which is strictly for women. They actually do save. And what we find out at any point in time, about 1/3 of our risk asset, our portfolio to them, we have that in savings from the same people.
Okay.
So it's for us, it's been a very interesting journey. The poor save, and the repayment is very good. Okay, in terms of collaboration, I will just have to we just made this investors conference yesterday, where quite about 10 major investors came to talk to us. As we speak, we have another bigger gathering in Italy at the moment. Some of our colleagues, there's an annual microfinance event in Italy are there at the moment. Between the 4th and the 10th of next month, we're also in London for a roadshow organized by the NSE. So we're looking beyond just Nigeria. We're seeing what's possible. Okay. And the response has been absolutely phenomenal. Everybody knows about the 160 million people, and they see the potential, and they are very interested.
Okay. On that note, Mr. Critical, I want to thank you so very much for coming.
It's been a pleasure.
Excellency,
thank you very much.
I want to thank you very much for coming.
Thank you very much.
Thank you, sir. If we want to have an economy that is competitive because every citizen is stronger and contributing, then we must be inclusive in the way and manner in which we build our society. We build a society of inclusivity by making sure every citizen has a voice. Sadly, of the nearly 812 million people in sub-Saharan Africa, about 400 million are too poor and essentially disengaged from the mainstream economy. These people are shut out and not seen or heard on the public stage. If a tree falls in the forest and no one heard it, then it did not make a noise. So if the people grumble in their mud houses, wooden shacks, and bush paths, who is going to hear it in the ivory towers and on the main streets of Africa? Sadly, their voices will continue to be unheard unless they are included in the mainstream economy. It is a good thing to bring the poor in. Of course, for long-term and sustainable success in this, education is the key. But things being the way they are in Africa today, to have an immediate impact in financial inclusion, the active poor must have access to credit. In Africa, per capita GDP averages well under $2,000, compared to a global average of nearly $9,000. Of course, few countries like Botswana, Equatorial Guinea, Gabon, Mauritius, and South Africa have per capita incomes of well over $5,000. Consider gender equality as an indicator of inclusion, and Africa also lags the world with a gender inequality of 0.735 compared to 0.560. Added to this, a female secondary school enrollment ratio of only 32% versus 65% worldwide, and you know Africa needs transformation now. Hopefully, the light at the end of the tunnel doesn't get dim every time we take a step. What I mean is this: our under 15-year share of the population at about 50% compared to 27% worldwide is a future asset if we can end some of the terrorism and conflicts that are undermining endeavor. And this means we must prevent our youths from being free radicals because they are not absorbed by the labor market. We must get our female child to be at par with our boys in the promise of the future. Africa has to find a way to raise its GDP per capita and the level of living for its people. To do this in the long term is to increase the participation of all through education. But to get started right now, we must provide access to credit and capacity to use it for our poor to engage the mainstream economy. A sure way to get this done is for government policy to aim at generating affordable loans to microfinance firms for unlending to the people. I'm Magnus Packel, and that's my view.